Hello, fellow investors. Today we're diving into the exciting world of Realty Income, ticker symbol O. You might know them as the monthly dividend company, a name they've more than earned. Why? Because they pay dividends like clockwork every single month. That's music to any investor's ears. Realty Income is a real estate investment trust, or REIT. They own a massive portfolio of over 13,000 properties across the US and Europe. We're talking about those essential businesses you see every day: convenience stores, drugstores, restaurants, the kind of places that keep running no matter what the economy is doing. This brings us to their incredible track record. Realty Income has paid 658 consecutive monthly dividends, not to mention 128 dividend increases since they went public in 1994. That's consistency you can count on. Now, let's dig deeper into what makes this dividend powerhouse tick. Many companies pay dividends quarterly, but Realty Income stands out with its monthly payouts. Imagine receiving a steady stream of income every month like clockwork. This frequency can be a game changer for investors seeking regular cash flow, such as retirees, but it's not just about the frequency, it's about the growth. Realty Income boasts 30 consecutive years of dividend increases. That's right, they've consistently raised their dividends year after year, making them a true dividend aristocrat. Their latest increase, back in February 2025, bumped the monthly dividend up to 26.8 cents per share. That's a healthy 4.5% jump compared to the previous year. This consistent growth is fueled by their strategic acquisitions and strong tenant relationships. Realty Income is often seen as a safe haven, especially during turbulent times. Their diversified portfolio, spanning across different industries and geographies, provides a buffer against economic downturns. Even when some sectors struggle, others remain resilient, ensuring a stable income stream for investors. Their high occupancy rates, consistently hovering around 98 to 99%, are a testament to their strong tenant base and smart property management. Plus, their triple net lease structure means tenants cover most property expenses, further reducing Realty Income's risks. However, no investment is entirely risk-free. Realty Income, like other REITs, can be sensitive to interest rate hikes. Rising rates can increase their borrowing costs, potentially impacting dividend growth. Furthermore, their growth might seem modest compared to high-flying tech companies. So, is Realty Income the right fit for your portfolio? If you're an income-oriented investor seeking a reliable stream of passive income, Realty Income deserves a close look. Their monthly dividend payments, consistent growth history, and defensive business model make them an attractive option for retirees and conservative investors. However, if you're chasing high-growth stocks with the potential for explosive returns, Realty Income might not be your cup of tea. Their strength lies in stability and steady income generation, not rapid price appreciation. In conclusion, Realty Income stands out as a true dividend champion. Their commitment to monthly payouts, consistent dividend increases, and resilient business model make them an excellent choice for those seeking financial stability and long-term wealth building. Remember, investing is a marathon, not a sprint, and Realty Income is a reliable partner for the long haul.